Wait a minute. I know with a lot of our clients, we strategize when it comes to life insurance. We use life insurance, if it's done properly, understanding it's a long-term mindset, by overfunding cash value life insurance plans. And some of the folks like to buy residential real estate as an investment, because in residential real estate, you get 4 different rates of return. You get cash flow, mortgage interest write-off, depreciation, and obviously if you bought a property today, you expect to sell it at a higher price later on. Now, for the entrepreneur out there that decides to overfund his cash value life insurance policy and builds it up, and it's earning that guarantee rate of return by state law and by contract, now all of a sudden if they buy that property and the property is $200,000, they put $40,000 down, the renter pays back their policy, so they pick up 4 rates of return in the residential that we just talked about, plus dividends, interest, and the money being paid back to the policy. So it's about 7. What are some of the tax benefits that I'm not thinking of, if any, when it comes to commercial real estate, and then rinse and repeat the same model by overfunding your life insurance policy as the down payment for your commercial?
Well, the tax benefits...
And you're not an accountant. No one's here an accountant. We're just having an open conversation.
Right.
Yeah.
The tax benefits on residential real estate are essentially identical to what they are on commercial, but the numbers can be bigger. So you get depreciation, and people don't realize this. You can have just about any other business other than real estate investing on this planet. And if you make, for instance, a $5,000 profit by having a flower shop or a bicycle repair shop or a laundromat or whatever, if you make a $5,000 cash profit after all your expenses, your cash expenses have been paid, then you can expect to pay tax on that $5,000. But if you own a piece of real estate and after all your cash expenses have been paid, like property taxes, insurance, maintenance, and you're left with $5,000 net cash income, you don't necessarily have to pay tax on that, because it depends on something you mentioned, depreciation. Depreciation is a phantom deduction.
Yep.
The government is not so silly as to think land goes down in value. They know land goes up in value, but they are willing to assume that buildings go down in value. How is that possible when you already said that in the last year, real estate in this country went up by 31%, and the government thinks it goes down in value? And the answer to that is no. The government is not silly enough to think real estate goes down in value. But there are 2 reasons for taxation. Most people don't think about this. They don't realize it. One reason for taxation is revenue generation. The government provides certain services, border patrols or controls, and issuing of passports, and you name it. They need money for that. So they charge a tax to generate income.
Yeah, the confiscatory hand of the government, taxation without representation.
Right.
And the slings and arrows against some inflation.
Yes. The second reason for taxation is to shape social policy. So, for instance, they'll charge a higher tax on liquor and